We are live now, Vincent. So give it a few seconds. People will start tuning in a moment here.
Okay.
Be here. Make sure we get this going. Make sure I have it on there. Hi there, Vincent. Thank you for tuning in. I'm excited that we're here today. So, it's good news that we're able to go ahead and keep this going. I plan on doing it every week, having new people on to discuss important topics of discussions. We're going to be covering a lot of important facts, buying, selling, investing, different type of loan products and services that are out there because there are so many things that are going on. And the most important thing is educating the community of their options. And nowadays a lot of people still don't understand the different options available to them. And each person that I deal with have different products and services that they're offering that allows for the community to be able to grow and have knowledge. So I wanted you to be able to share some details about what you're offering and give some insight on the different type of loan products, particularly the ones that we had talked about. But go
Ab-
ahead and introduce yourself, and tell the community who you are, what you're offering, and details about your company.
Absolutely. My name is Vincent Powell, and I am a loan officer with Nationwide Mortgage Bankers. Um, and I'm based in Jacksonville, Florida. Um, and some of the products and programs that we talked about the other day, the first one we talked about was the FHA 203K loan, which will a lot of people don't know, but it allows you to finance in the cost of renovation on primary homes for FHA. So if you have a home that's maybe like a fixer upper or needs a little work to get up to where you want it to be, even cosmetic items can be considered in a FHA 203K. So that's a real exciting program. I see it under
When
you.
when you say cosmetic items can be included in that, please explain a little bit more about what you mean in that area.
Okay, cosmetic items are like flooring, you know, different things like that are not cosmetic items are items that won't affect the health and safety um, of a person and the property. So if you're talking about things like I don't know, you know, repairs to the kitchen, things to the kitchen that is not actually require repairs. It doesn't affect the property or anything. It's just maybe just trying to upgrade it a little bit, and those items can be financed into the loan.
Okay. Okay. And does that consist of establishing brand new cabinetry, flooring, and things like that?
Yeah, things like that can be included. So it's two types of 203Ks. You have a limited and you have a full. So it just kind of depends on what items that you want, and then that'll help us decide what type of 203K loan that is going to be required.
Okay.
It's small things all the way up to, you know, more serious things like HVAC units, roof, things like that.
What is typically the requirements for that type of loan, especially
Well,
since it's a renovation loan and people can benefit from it? Not everybody's going to qualify. So, what exactly is it that's going to allow someone to qualify for that particular kind?
well, it's an FHA loan, so you have to be able to qualify for an FHA loan, depending on whatever the lender's minimum credit requirements for FHA loan. So you have to meet those. Then you have to look at whatever the purchase price is for the property. This is the purchase price that you're purchasing it for, and then the loan amount based on that, which is going to be 96.5% of that purchase price. That's going to be your loan amount. So then you have to factor in, can you qualify with an additional loan amount because of the repairs? So you have your loan amount that's here, and then You have $30,000 in repairs. So that's going on top of the loan amount. You have to be able to qualify with all of that. So you just have to be able to qualify for the additional loan.
Okay. And do a person, if they qualify for that loan, would they be required, would they still be able to qualify for other incentives, like a down payment program, things like that?
Well,
Typically,
typically, a lot of down payment assistance programs don't work with the 203K type of a loan. Simply, a couple of reasons is they require the home to be, depending on the types of repairs that need to be made. Typically, they require the home to be in a certain condition
mhm.
uh, in order to fulfill that loan. And these loans can take a little bit longer than your standard loan turn time because you have to deal with contractors, you have to deal with renovation, repairs, and they have to get bids and all that type of stuff. So it's a lot that goes into it. And I don't, I would have to read the individual down payment assistance programs to. I haven't seen that program was actually acceptable on the down payment assistance programs that we offer.
How will they determine who does the work for those type of programs? When it come down to the construction loan, you know, do the buyer get to choose who they want to do the work, or is it FHA provide certain guidelines and they have to be a certain type of
Well,
inspector?
well, the actual person that's doing the work has to meet certain requirements. I don't know all of those requirements, but they'll know what those requirements are because you're going to work with a sort of like a project manager that kind
Hmm.
of the buyer guide. It kind of it's they're appointed by HUD and it kind of helps the buyer guide themselves through the process.
Okay, so they'll.
So and they'll make sure that the work is actually the pricing and all of that is actually above the board and all of that type stuff.
So, question: if they're appointed by HUD, is HUD providing the list to the buyer of options, or the buyer has to go and search for those who are qualified through HUD?
So 9 times out of 10 that I've seen that the buyer already has a list of contractors that they work with, and then we just have to make sure that they're on that list. They usually get about 3 contractors and bids from these contractors detailing the work that they're gonna provide and the prices that they're gonna provide for that work.
Okay, so they have all that information set to a side. Now, what do you feel the most important difference between the traditional FHA and that type of loan?
The difference is that you're able to finance in repairs. Most regular FHA loans, you can't finance in anything except for that loan amount, and that's pretty much it. But on this loan, you're able to finance in those repairs. You don't have to pay those repairs out of pocket.
Right. Is there a deadline to have everything completed by?
There is a deadline, and they have all that spelled out. They have deadlines depending on what type of loan it is,
Hmm.
um, and they set those timelines up in the beginning. Once they
Okay,
get the contract bid and all of that, then they'll set the timelines on it. And these are not 30-day closings. So
of
uh,
course. Well, the
so
seller would have to definitely agree to those terms, because technically it would have to be somebody that's willing to work with the buyer, because most sellers now are trying to close within 30 days or less. So particularly, I get a lot of people asking me, well, the home needs repairs. You find that there's a lot of properties out there that need repairs, and they wouldn't necessarily qualify for a traditional FHA loan without getting those things done. So they would
mhm.
have to get this type of loan, which allow them to be able to take care of those repairs. And the seller would have to be willing to allow for that time frame, because technically most of the sellers, if it's sold as is, they're not interested in waiting for the repairs to be completed to get paid.
Right,
And
right.
then, another thing we have to factor in, how are those individuals going to be paid? Are they going to be willing to, they're going to get paid after the closing, or is FHA going to provide them some monies to start the process?
So yeah. So how they get paid is they get paid on a draw type system. So they'll get draws throughout the process based on it's actually between them and the lender. So the lender will work with the contractor and disperse those draws.
Okay, so the money is provided before closing.
Mm-hmm.
Okay.
Unless
And
it's a specified repair that some repairs can't be made prior to closing, such as if you're in an area that has some weather related issues or something like that. Let's just say you're in Pittsburgh and you need a new roof. They may allow that to be done after closing if within like 60, 90 days after closing, because you can't get access to the roof because of snow on it or something like that. So in those instances, they may allow things to be done after closing.
is there any opportunity for conventional, those who may have a conventional loan to take advantage of that particular type of loan? Is there something that is an option, for particularly, FHA has this type of loan, and we do know there's a lot of properties that qualify for conventional as is and may need some work. Is there any conventional loan products that allow for buyers to be able to utilize something like that? Or they
Yeah,
pretty much have their own money?
yeah, conventional does have a renovation product. It's called a home style renovation, and it works sort of the same way as the FHA product. So you have to be able to qualify for a conventional loan. So that's first. You have to be able to qualify for that loan amount, and then of course the additional, which is going to be the cost of the repairs. So it works pretty much the same.
Okay. Now, here's another thing that I quite often get customers contacting me about getting a home built, new construction, but outside of a subdivision. I don't particularly represent buyers who have their own builder because there's no benefit in that for me. But sometimes I do have people want me to do that, and there's a way it can be constructed where I can assist. But typically, if they're already working directly with the builder, it's not in the community. The builders are going to have their own plan set up, and then the buyer is pretty much going to be responsible to pay commission if, in the event, the builder's not. So, what are your thoughts on that? If a buyer, wants to get a new construction loan and they're
Hmm.
not using a subdivision, and they pretty much, I guess, will have to already have their land, because I have some buyers who already have land and they want to finance new construction. How does that work? When it comes down to financing new construction.
Yeah, I mean, if they're building on their own land, so that's typically what is called as a construction to perm type of loan, and we do those. So basically,
Okay.
how it works is, and it's called a one-time close. So even if you don't own your own land, you can go under contract on a piece of land and then go under contract with the builder and then close everything at one time, and
You
it's called
can.
a close. Yes,
Okay, so you don't have to buy your land first. You can buy the land and have a builder and do everything all at the same time, even though
yes,
it's not in a new construction subdivision.
right. It's called a one-time close.
What typically are the requirements for those who are not going into a subdivision and going on their programs and their particular preferred lenders? What exactly is going to be the requirement for them to utilize such type of service? Of
Well, they
course,
just have to find the land and then have a builder, and that builder has to meet certain requirements. Again, there's a builder's packet that goes out to that builder. They have to register for this, fill out this form, and all of that, and they'll be qualified for the program. Other than that, it's just basically qualifying for that loan amount. So um, you have to, I mean, you just have to be able to qualify for whatever that loan amount is with the all together with the land and the building and all of that. So um, you just
so
have.
it's going to be the same scoring system. I mean, do they have to have money down? Of course,
Oh yeah, yeah. It's
particularly if you're going to do it that way, you're not dealing directly with a builder, so they're going to need to have some collateral. Because I think a lot of people misunderstand what's available. They think that all things are for all people when it comes down to that type of stuff. If you're going to have a house built from the ground and you got to find a builder to do it, and you're going to have the land, 9 times out of 10 you're going to have some collateral. You're going to have money and meet the
right,
financial requirements to do that, because the cost of building, it can be a definitely more cost of didn't actually having a house already available.
right. I mean, you have to look at a couple of things. You have to look at the prices. You have to look at what the price of the land is and what the cost is going to be to build. And you can still go up to the FHA's maximum loan to value, which is 96.5% of the sales price. So you can still take advantage of that maximum financing, but the things to consider is um, how long is it going to take to close? You just went under contract on this land, so is that seller going to wait? Does he need an additional deposit? So you have to look at that. You have to look at builder deposits because, of course, they're going to want some type of, for them to actually start the work, they're going to need some type of deposit.
Makes a lot of sense because basically, if anybody's going to start on the project, they're going to want to have some collateral. They're not going to use their own money to buy the materials.
Right. Right.
You know, they're expecting you to have some money to invest into that. And, you know, it's not like going into a new construction subdivision where they're going to sell their home regardless if you buy the house or not. So the plans are pretty much laid out for the community. So when you're looking at those communities, yes, there may be some transactions that don't clear. I've had maybe 2 of them that happened in the last few years because of the interest rate change and the payments changed, and the buyers decided they didn't want to proceed because it was a drastic change in the payment amount. Particularly in Georgia, I had that happen recently in the last 6 months because a buyer had a house that was being built, took about 6 months. The interest rate jumped up high. They could not lock the rate in for 6 months. The rates are not locked in for 6 months.
Right.
That's the only thing about having a house built from the ground. If that changes, that also is going to change your payment amount, your monthly payments. And then therefore, it can knock you out of the income bracket, or you can buy your rate down, but it probably won't be at the same rate that you had before. It's a lot involved with that.
Yeah. I mean, you can potentially not qualify anymore.
Mm-hmm.
Yeah. So, I mean, we see that happen this year just on regular loans when we had people pre-approved in February and then they come back in, June, and it's like, hey, the rate, what we had you pre-approved at, we need to redo this thing because the interest rates have drastically increased.
Yes. And then when that increased, it changed the payment amount. Everybody's confused about what they thought they was going to pay. And I always inform buyers because some people think, well, I got time. Even if you're not getting a house built and you haven't made a mind on finding a house within that time frame, the rates change. They can't lock the rate in until you actually have a contract. So sometimes people don't understand that, yes, your approval. And that's why I don't tell people the approval is good for 90 days or 6 months. I never tell someone that because they're going to pull your credit again. They're going to recheck stuff. Things can happen within that time with your credit. Scores go up and down. And then some people decide they might want to make a purchase. Here's my motto on this. If you're really serious about becoming a homeowner and your car breaks down, it might be more important to see how much it costs to rent a car for 2 months than to get a car loan while you're in the process of buying a home, which allow you time to not have impacted on your credit. Because if you're going to be paying a car loan, you might be able to find a little small, reliable transportation. It may be like $400 or $500 or maybe $500 or $600, who knows? But it still doesn't tie you into a car loan. And then you can still close on your house without impacting your debt to income ratio.
Right.
I've had people getting approved, think the approval is good, turn right around and buy a brand new car. We're talking about, $700, $800 car note. Why would you go do that? You know what I'm saying? Even if you have the money, it's going to impact your debt to income ratio. And you're already struggling if you only qualify for $250.
Right.
You're going to get a brand new car. $250 is not a lot of money when it's time to buy properties in certain areas. I had someone trying to do that in Auburn, Alabama. The cost of living is a little bit more. You're down there by the college. The homes are costly. They're not cheap. So when someone buys a home down there, you're looking at $250 and up.
Right.
For a 2-bedroom townhouse. Okay. So at the end of the day, when I talk to clients, I always ask fact-finding questions. That's what's different about what I do as a broker and a realtor. I ask the questions that pretty much the loan officers will ask. So I know what I'm dealing with when I'm dealing with a buyer and what the expectations are. And then the problem I run into, a lot of people don't even know what the annual household income is or their personal annual income. And they've been on these jobs 5, 10, 20 years. I said, so first question I asked, thank you for reaching out. Let's discuss a few important facts. How long have you been on your job? I've been on my job 10 years, 5 years. I said, okay, what would you say your annual household income is or your particular income you make from your job? Well, I don't know. You don't know. You've been in your job 10 years. It ain't changed that much drastically in the last 3 years unless you got a large promotion. Your income is pretty much going to be consistent unless you've got a promotion. And if you do get a raise, it's not going to be like you're making $20,000 more the next year. So you need to know what your annual household income is, your income, and if you're married, what your spouse is bringing in. And if you can't remember exact amount, you kind of get an estimate. When you get a W-2, the W-2 states on there what you're making.
Right.
I guess people are not looking at the W-2. They just send it straight to the tax preparer because they're getting money back. Those days for me are over with. I ain't getting nothing back. It's spending thousands of dollars yearly. Okay. So at the end of the day, we all have probably been guilty of that. I'm not really paying attention to that, especially when you're not making a lot. So you're not really concerned about it. You're just trying to figure out how you can get some money back. But the
Right.
most important thing in life is when you get ready to try to build a house or buy a home or whatever you acquire property for an investment, you need to know what your income is.
Right.
Even if you are on a low income scale, know what that is because that might motivate you to do something better.
Right.
Oftentimes, people will stay on a job 20 years and making the same income that people are making coming out of high school. So you have to determine what exactly is important to me, what direction I'm trying to go and how this is going to impact my overall goals because the economy is changing. The cost of living is going to keep going up. It's not going to go back down. So a lot of times people keep thinking, well, I'm going to wait to buy. Well, you're going to keep waiting and you're going to keep renting because people who I was working with in 2019 had issues, did not follow up with their credit. And now we're here. Back in 2019, they were able to get a 3 or 2%. Not
Right.
now. You're not getting no 3 or 2%. And that might not happen no time soon for many years because the rates will go up before they go back down because we're in a different recession right now. We're in a different time frame. And I've been dealing with real estate for about 20 years. I started when in my 20s. Started doing investing. And then I bought my first brand new properties back to back. I was doing investments. And then I noticed then the interest rate were higher,
Hmm.
And so we might pay for 150K, you might pay almost 1,200 a month back
Right.
during that time. And those are new homes. So you still got more home and then you were paying a little more because of the rate. But now you're getting less home and paying a higher rate.
Right.
And for you to get the dream home, you're spending at least 375 and up, for the real, really nice homes in most in southern states. Now up north, you're gonna be paying more than that. Where are
Right.
you located at, Vincent?
I'm located in Jacksonville, Florida.
The cost of living in Jacksonville, Florida for a brand new home, what would you say the starting point is in that area?
Probably about 375 to 400.
That's not too bad. Because I was looking at buying a property in Destin, Florida.
Hmm.
I'm out here. Okay, this is recently. When I went down there, Tampa. I went to Tampa. Then I went to Destin. Then I went to Tampa. This has all happened in the last 30 days. So a few weeks ago, I was down there in Destin. Did an Airbnb. So I'm deciding I'm going to buy me an Airbnb. And we're talking about they got 2 bedrooms going for 375 in Destin. 2 bedrooms, 1,000 square foot homes. So you'd be happy to find something for something. So
Right.
when you said 375, okay, I need to look into Jacksonville. But I do want to buy some in Destin because that's only 3 hours for me, and I plan on getting it as a secondary home, and also maybe do some Airbnb. So it just shows you, no, there's different costs depending on where you are. If you're going to
Hmm.
California, the cost of living is going to be a totally different situation, but also the income is different.
Right.
I've sold homes to investors who make a decent income in California, but they cannot afford to buy a home there. So what they're doing is investing in properties down south so they can still get some income from the investment, but they have not yet bought a home in California or New York because of the cost of living there.
Right.
They qualify for 400K here, but they were not able to buy a home in New York or California for that price range for what they wanted. Like it would be just not worth it. It would
Right.
be cheaper than the rent where they were at versus to buy because of the circumstances. So
Exactly.
there's a lot of things to consider.
Absolutely. Absolutely. I think that when you're considering, and I deal with a lot of investors that are in New York. A couple of guys, they only buy investment properties in Jacksonville, Florida. And
Okay.
one guy has bought maybe about three or four, and then there's another guy who's bought about two or three. And they're in like New York. One guy's an electrician, and he works in the subway system in New York. And I'm like, so why? I asked him. I'm like, why do you only buy properties in Jacksonville? He doesn't even see these properties. He has a realtor.
Property manager.
We know he has a realtor here who actually goes and takes pictures or whatever and kind of sends it back to him, and he kind of, he kind of goes with it. But he's just like, it's tons of opportunity in this area to make money. So that's why
Mhm.
they.
Mhm. What I normally do with my investors, of course, most of them don't live here either.
Right.
Most of them are California, New York, Texas, Georgia, other places. So instead of them driving down, we do video calls now,
Yeah.
live videos. Like they call me, we either use FaceTime,
Hmm.
Google Hangouts, WhatsApp, or whatever that is. If you got Instagram, whatever allows for whatever apps you use, because not everybody uses the same technology and not everybody uses the same apps. So I pretty much adapt to whatever they use. Some people don't really use much at all, but if you want me to show you a house, you're not going to be here. You're going to have some type of app. So we
Right.
usually do video live calls, and we walk through the house just like they were there, looking through every room, every area, open up doors, screen the backyard, the street view. I might have it live, even driving with the camera, holding the phone in the window so they can see exactly what's going on in the community, which
Hmm.
allows them to be able to see what's happening with the area they're going to choose to buy in. Then what I typically do is pair them with a property manager. I do
Hmm.
not do property management. We manage our own properties because we do have rental properties, but I do not manage other people's properties at this time. So I usually connect them with a property manager in the area of their interest, because the property manager is going to know first and foremost, what is the cap rate? What is your income that you can possibly make on these properties? What is the
Hmm.
community looking like? What kind of condition is the neighborhood? What kind of issues they have had with managing those areas? Sometimes they would tell you there's certain areas that you're going to have tenants that come and horrible. um, I learned a long time ago when it came down to the tennis. I mean, things have changed a little bit over the years, but tennis can be a headache sometimes. And depending on where you want to buy or lease a property, you're going to get certain type of tenants to go in those areas. And
Right.
typically, a lot of times, tenants want to use landlords because they feel like landlords will be more linear than it would be to rent apartments. Apartments, complexes, they're going to put you out, baby. If you don't make that rent, they're going to charge you fees, and then they're going to file an eviction real quick. You're not going to get the leeway you get from a regular landlord. That's why it's important to have someone else managing the property, because typically people want to form relationships and want you to feel some type of way, but business is business and rent is rent. I mean, one thing I've always told people, if anything go down, you got to have a place to live and transportation. Unless you live in an area that you can get on a bus and you can hop on without any issues, then you may not have to worry about a car. But the
Right.
average person, you need transportation. So those two things you don't play around with. And then if you had to decide on anything to pay, you got to keep your lights on.
Right.
Those, I mean, if nothing else, transportation for you to get back and forth for work, because if you don't have transportation, you're not going to be able to get to work. Okay,
Right.
so you either live in an area that don't require you to have a car, or you need to have a reliable car so you can get back and forth. And then in that event, you got that. And your place of living, you make sure you keep your place of living. We offer the credit repair consultant, and we know that people have evictions. And a lot of the times, unfortunately, it's for mismanaging money.
Hmm.
Mismanaging money. People have gambling problems or the issues they're running to. So we always educate people, if you're serious about doing some, whatever habits you have, we got to set that to a side to accomplish a goal.
Right.
Set that to the side and do away with it because it's hindering your growth. Most people can pretty much make enough income to pay rent, to have a place to live, to be able to afford a housing situation. And you might not be able to get your dream home, but it's
Right.
an investment. So you may not be able to get the $300,000-$400,000 home you've been seeing on Zillow that you've been looking at. It's, oh, I want this dream house in this period. I want to buy that. But you will be able to probably qualify for some if you finally get your credit together, you have some savings, and be in a better position, because although you might have a down payment program, you're going to still need some money. You're going to
Right.
still need some savings.
Absolutely. Absolutely.
And so, what kind of, besides the program that we talked about for the FHA construction loan, what other products does your company offer?
We offer a full suite of products: conventional loans, FHA loans, like we talked about, the 203K, the conventional home style renovation loan. We offer tons of commercial products. If you're interested in fix and flips, you're interested in buying and holding property, you're interested in building new construction. Um, we offer those products as well. We offer a lot of different, we work with a lot of state agencies for down payment assistance. We, we have a pretty much a wide range of products and services that we can offer.
Okay, well, that's good to know. So basically, how would anybody contact you if they're interested in the products or services that your company's providing?
I can be reached by phone, 904 7823. And I can be, my application link is www.nmbnow.com/vpowell. So that's NMB like Nancy.
You look like you went out. Mr. Vincent,
Yeah,
how?
I
What
went
we,
out. It was the phone was every time the phone rings, it goes out.
oh,
But
I don't. Yeah, whenever you're doing a yeah, try not to use the phone. I use the computer because I already know calls gonna come in, text gonna come in. It always
yeah,
do that. Yeah.
so
Okay.
yeah, I can be reached on my website is www.nmbnow.com/vpowell. So that's NMB now is Nancy Mary Boy now.com/vpowell. So you can go directly to the website and apply. You can read up about the company and everything like that. So
And we closed the transaction last week. What was the week before last? New
yeah,
in Birmingham. And what I appreciate about his team, they good about following up and notifying me. And that's I'm big on that, because if I'm sending you business and I got clients contacting me weekly, not everybody ready to purchase, but I get them ready because we do have a consulting company. We like to have good communication. And I think that's what customers want too. Someone that follows up with them. Sometimes we do have to babysit people,
right.
but people getting followed up on, that's what most people are interested in. They want to be able to have a connection with someone and be able to you know communicate, and someone that's following up about what they're trying to accomplish. So that's what I got from you, and I really appreciate the opportunity that we was able to work together and be able to accomplish that goal and getting that close. And we got some other stuff lined up, so looking forward to doing more business with you in the future.
Absolutely. I appreciate it. It was my pleasure.
So, did anything else you want to leave out on before we end the live?
No, that's good. I appreciate. Thank you for allowing me this opportunity, and look forward to doing it again.
Okay, great. Well, look forward to it, Vincent. And you have a great day. I'm going to let you go ahead and you know, in your day, and I'm going to say a few things on my end to.
Okay.
And I guess you can share the link if you see my streaming. You can go ahead and share it on your
Oh,
page, and anybody else that want to share, click like and share. The most important thing is providing knowledge to the community, and we're going to be sharing different topics of discussion weekly and life skills as well. So,
all
other
right.
than that, you have a great day.
All right. You too.
Yes, sir. Hi, everybody. So, those who were able to tune in, I really appreciate you guys staying on or tuning in here and there. I know people are often at work around this time. So, typically, what we do is post the video to allow for those who did not get a chance to tune in to go back and view the video for their liking. So, the goal is to be able to help the community understand the different loan products and services that are out there for them, so they understand the process, and they have someone they can connect with. They understand that there are many opportunities out there for them based on their financial situation. And so for those who had the opportunity to stream in, or who came in late, the video is typically about 30 some minutes. You guys are more than welcome to go back. I will be posting it on the platforms. Um, of course, we will have to share it on Instagram, because with the new technology, we have certain things we have to set up a certain way for it to be able to stream on there live from a desktop, because I'm using different cameras and different desktop settings versus just using a cell phone for Instagram. So we won't be doing it that way. We have different way of going about it. But I'm glad that you guys tuned in, and we're going to have more great topics of discussions coming up. We're going to be talking about some more things regarding credit and investing. But this is just a video that we left off on to let people who are interested know that we're here for the community. This is just not about whether you have an agent already or whether you already own a home. You may know someone who needs this information. When it comes down to buying, selling, and investing, the world changes. Different things come out, new products and new services, new goals, new interest rates, new programs. And not all programs are for every area. So you need to know what programs are going to be for your area. And that's what we're here for. We're here to educate you to ensure that you are meeting your goal. So if you have a goal that needs to be met, we can help you, but you have to put forth effort. And that's what I always tell anyone. If you're trying to accomplish something, if you're not putting forth effort for your goal, then it ain't going to work out. It's not going to work out the way it should be. So if you have any questions, feel free to send me a direct message. Click like and click share. Don't be afraid to share or like the video. We all here to support each other because it helps the algorithm. Although we have views, and after we get through with the call, the video, it will be available for those to click on and share. But it does help when people are supporting it while it's live, because the algorithm supports those who are getting comments, those who are actually getting likes and sharing. Then it allows for more individuals to see it. All right. So, other than that, you guys have a wonderful evening. I appreciate you tuning in. Bye bye.